Hey traders, Nick Shane here looking at Snap, and this is an exciting stock. Last year we did hit a couple of good home runs with it, and the best one came from like 12-ish to 18. And I see another setup that is similar, but let me debate why it's kind of like an iffy start, because it goes into earnings soon, I believe next week. Today is the 27th, bad day in the market, bad day in Snap, but the buyers are still in control of the chart so far, at least at this 2-hour chart or higher time frame. It all depends on what time frame you're trading. So if this is a swing trade, what I'm suggesting, then the buyers are still in charge. If it's a short-term trade intraday, then definitely not. Pops are sold, and it's where it stops as far as bottom. The trend is still ascending, and there are necklines that are important. So I draw a lot of lines, and I keep most of them. I delete the ones that become unimportant, but in this case there are a lot of lines that are still important. So this is a 2-hour chart, and it shows that it's a bad day, it's off the highs. These are not all-time highs because they came out of the box and then fizzled for a long time. Well, this is a technical bet on my part. I don't know anything about their fundamentals. I kind of do. I know that my son and his friends were always on it, but nobody uses anything. But social media advertising is definitely there. I fell for it a couple of times on Instagram, and bought some stuff that I saw off of there. So it is working. If I'm biting on it, which I usually don't, then it's definitely working. That's why Facebook opportunity is important in my opinion. So Snap will probably, there's enough room to go around for everybody. So as long as management doesn't completely mess up, then the upside scenario could unfold. So this is a technical bet with a huge twist next week on earnings. The earnings reaction is a complete coin flip. But if I ignore the earnings, the charts are looking good and the dip should be bought. So my bet is that as it falls into 18, whether it gets there or not, it's a buying opportunity. So it all depends on how people want to trade it. I know I can trade it, and if you want to know how I would trade it, hit me up. There's a link down below. Join us, and I'll share the particulars. To the members, I'll send it out in writing. So this is just a heads up that it's there. So this isn't, the green line here is important. And if you've watched any of my videos before, you know what I'm going to say. It was a huge failure point, easy for me to say, a huge failure point. Back to it, they broke out from it, and now they're testing it for footing. If I look left further out, so this level is like 18 and change, 18.3. This was the target for my last run on it. So clearly I need to expand higher time frame than 1 day. This is, every candle is 1 day. This is about a 1 year's worth of data. So you see that it used to be my target. Then they got to it like I thought they would, made us a good amount of money there. Then they failed, and they got to it again, and then they failed, and then they got to it finally after a long rest or rounding bottom of sorts, and then they got above it, and this is their first test of it as a neckline. So clearly I need to expand it to a weekly. So this is where, okay, you think it's a lot of noise, so I'll take them out. So this is what I just said. To failure after reaching the target, failed again, failed, and then finally got above it and held it. So if I look left, look how much more important that level was. Look how big a valley that was. That was a huge accident scene. I mean, what is this? 75% drop from that point. Look how long it took him to get back. And then again. And then again. So this is a very important neckline. I'm going to put the lines back on. So you see why I'm excited about the neckline. Technically, this neckline should be almost as deep as this drop. So what is that? $18 down to $6. So let's say just $8. The upside is this line, this green line, doesn't do it justice in technical terms. The only reason I did it that way is based on prior action. So if you notice, this peak matches a prior failure point. This peak matches a prior failure point. So yes, technically the technicians could draw them better I do my best attempt at drawing them properly, but to me, really, if I don't do any of this stuff and I just do it manually, I'll use a crayon to illustrate the point that the price action is taking its time coming here, and then its time coming here. So this is a neckline. So now it's starting to look like a cup and handle. I bet you can draw an inverse head and shoulders that way too, to where, let's go with the cup and handle for simplistic reasons, because it's clear to see. So what does that mean? It's a bullish setup that says the bears were strong and confident. The bears are less strong and confident. So the bulls might overwhelm the bears, and if they can just test this successfully as support, then this will happen. How big? Usually it's the depth of the cup. So eyeball this, but first I look at failure points as my other two lines drew it. So we won't do this in one shot. We'll probably do something like this, and then the earnings reaction could bring about a huge spike. Like this is a big weekly earnings reaction. Let me go on the daily. Okay, so this is a big reaction up. This one is a reaction down. This one is a reaction down. This one's a reaction up. Proves my point. Coin flip. Two up, two down. We don't know. The CEO could come out and say, this is my result, and I couldn't tell. He couldn't, or he couldn't tell you which way it's going to go, the stock. So at this point in time, if I put back the lines, this is a good bet, technically, if it holds this line, that they are in fact wanting to go technically breakout. So it is a way, there are ways to do this without any money out of pocket. There are ways to do it with minimal money out of pocket. There are ways to just buy the stock and hope. Nothing in here is a recommendation to buy and sell. I'm sharing the levels that are attractive to my eye right now. And Snap, although I don't like the fundamentals, I think it's pretty expensive. I haven't looked at it in a while. So fundamentally speaking, it's at a disadvantage to, say, Facebook. Whoa. Okay, so clearly it still loses money, and it sells at 17 times its sales. Facebook is expensive from that perspective, and I think last time I checked it was like nine times sales, and that's really expensive. To put it into perspective, Amazon is under 4 times its sales, and people think Amazon is expensive. Amazon's cheaper than Apple that way. Okay, so 9 times sales. So Amazon, yes, it's expensive PE because it's 70 or 60, whatever it is. What is it? Come on, this is so slow sometimes. 80 PE, but it's under 4 times its sales. So it's a growth stock. I don't look at the PE. I look at how much growth it's delivering. And if it's delivering its growth, it's spending a lot of money to grow a lot, that's fine. So different measuring sticks for different stocks. 17 times sales on Snap is risky. So for valuations, this makes no sense. But the chart looks pretty darn good for as long as it holds this bottom, this neckline. All right, Nick signing out on Snap. Again, there's going to be a link down below. Take it if you're not already a member.